Hi traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. And yeah, I just tweeted out a picture of the dollar index just so people, I think people need to understand not to get too bullish or too bearish the dollar while you're stuck in the apex of the wedge, because you're going to get whipped around a lot. I mean, you know, um, I think the other day was, I played the dollar perfectly the other day down here to the upside, which is great. Not here, actually. It was played it to the upside here. Played it back to the upside here. Did not play it to the short side overnight. But now we're getting in that really, really tricky area, which you're going to have to be very careful with. So speaking of being careful, let's go over to the euro dollar and let's talk about the euro. So the euro actually was below its trend line slightly in Asian trade last night. And this is where we were at yesterday afternoon, right through here. And we're trading still above the key 108. Do you remember we wrote down two support levels yesterday, one at 108 and 101 at 108.30, right, or 35 or whatever. Okay, so we held 108, and you can see how we rallied off of that support pretty good. And so the trend line didn't hold, but the horizontal support did. So let me get rid of this line here, and let's move this. And let's move that, and we're going to keep this line for a second. Okay. One of the other things I want to note about the euro dollar here is that we made a marginal new high. Do you see this? Marginal new high from yesterday, barely, just enough to maybe trip a couple of stops there at the highs and then reverse. Okay. That in itself is a little concerning if you're a euro bull, because it's like, when you trip highs like that, it's not good. And then plus if we break through 108, then you got a double top playing already. All right, but right now these are major levels. I'm going to get rid of this trend line really quick. I think we might have to keep it for the most part, and maybe I didn't just draw it accurate enough. Let's get rid of that for a second. Maybe it's just slightly inaccurate here. I mean, it's pretty damn close. I mean, it's pretty damn close. All right, so what I think we're going to have to watch out for here is really sorry, getting some sleep out of my eyes, guys. Ooh. Okay. Oh, go euro pound. Dive. Sorry. Might have to close out some of this already. Hold on. Oh, like it. I'll have to take it. I don't know. Okay. Anyway, so above 108.85, then you have 109.10. So you got two really levels of resistance we got to deal with today in the euro dollar. 1.0885 and 1.0910. Okay, and this is really the key resistance, because if we break if we break 109.10, we're heading back up towards, this is a pretty easy move. Wow, we are selling off in that euro really quickly. Holy crap. What the hell happened there? I mean, you just kind of see, this is what happens. You get all these very whippy moves when you're stuck in the apex of the wedge. You just it just whips back and forth. I'm looking to see if equities have moved at all, and they really haven't. Some fast, like I said, some fast moves here. Okay, anyway, so let's go back to what I was just saying here. Um, if we get above 109.10, that would basically be that we're falling back to the, to the bottom edge of this dollar index range, right? We're going down here, right? So going back here to either test or, break down, one of the two. Okay. Right. That is happening if, now it's becoming more of a big if, that is if the euro gets above 1.910, then that means we're going to retest this, this 110.50. Okay. Now the flip side is if we break through 108, okay, if we break through 108, the support, then the dollar index is doing this. So I want to ask you guys this question. I'm going to look at the answers really quick. Jero says, look at US dollar fixed income is tanking. Is it really? Okay, let's go take a look at the 10-year. Come on. Come on. Holy crap. Oh, there it went, huh? You're right, Joe. Okay. Um, oh, look at that retest too. Okay, so let me ask you guys this. What type of chart is this? Dollar index, what kind of chart is that? It is a, don't give me some zoo animal. I'm sorry, what is a chart formation? Sorry. Candlestick chart. Good answer. No, it's not a descending wedge. A descending wedge, guys, is one that looks like this. Oops. Descending wedge is like this. We got both trend lines moving lower. Just this one would not be moving at the same speed as this, at the same descent. So what kind of wedge is this? Everybody's got the wedge part right. It is a bearish wedge, right? Bearish wedge. When you have consistent lows, lower highs, what direction should we break? Break. What direction should we break? Theoretically, we should break lower. There's a higher probability. If I had to put a number on it, I would say there's a 60% chance that we break lower and a 40% chance that we break higher. Or maybe a little bit, maybe 65-35, something like that. Okay, so with that being said, because we're in this type of market, a lot of times we're a product of the market that we're in. What wedge have we seen recently that did not break the way that we thought it would break? There's the trick question. Though it was a bearish or bullish wedge that did not break the way that we thought would break. Actually, it was a bearish wedge. You guys remember? Some of you are saying yen, but that's not the one I was thinking of. Maybe it was, but I don't think but you know what? Actually, the dollar yen might have been. Hold on, let me double check that. But I don't think it was. Yeah, dollar yen was a triangle. That's a triangle. Okay. False breakdown, false breakout too, which is another uh-oh. But let's do you guys know what it was? Greg. No, Don. Don, you were correct. Good, Don. Very, very good. Good job. It must be because you live in Oregon. That must be the reason why. People in Oregon are smart. See? I know that's what it is. All right. This is an example of a bearish wedge. This should have broke lower. This is Friday, right? This is Monday. Came zooming out of that bearish wedge. That should have broke to the downside, but broke to the upside. So just because the probabilities are higher that we're going to break to the downside, does that guarantee that we're going to break to the downside? No, not at all. And that, folks, is why you have to be really careful here. There's a lot of people leaning on the dollar, a lot of people leaning on the dollar. And I just noticed, I just happened to look up at one of my screens here, and Raphael, I don't know if Raphael's listening in this morning. Let me see if he is. He said gold is making new weekly lows. They are. Let me see if Raphael is here this morning. Oh, yeah, he is here. Hey, he got here late. Oh, good. I'm glad that you're here. He said I saw him on Twitter saying that gold's making new lows, and I try to not watch Twitter while I'm doing these webinars. Happens to be a screen, 2 screens away from me, but let's take a look at gold. Good eye, Raphael, because gold's making new lows, and we've yet to fill that gap, which George had pointed out last week that gold is yet to fill that gap to the downside. Okay, and you know what's better about this whole gold move? One of the guys on CNBC, he professed his bullishness for gold right there. It was classic. I mean, it was literally, I mean, I think he had, it's one of those things that you plan, you go on TV and you plan to talk what you're going to talk about. And gold was like probably like here the hour before, like before it went on. And then he went on and we'd already hit new highs and reversed. And he's like, and I just bought 112 calls for GLD. I think it's very bullish. And he goes, in the quote right now, he goes, is one, we're, and I saw him hesitate, and I know in his mind he was thinking, "Oh crap, I just made that call on live TV," and so anyway, it was pretty classic. But this is yeah, I can see why people are getting bullish right here when we have an inverted head and shoulder pattern that it's actually still building the shoulder. Never really broke out. It was trying to break out, but reversed. Anyway, so gold's falling a little bit, tripping some stops right now through these lows. And so that's bringing on some dollar bullishness too. So just keep that in mind. All right, let's go back into the currency market. I gotta really get started here. We're supporting the euro. I realized I'm way behind now, way behind schedule. So we have the euro dollar support coming in at 108. 108 is key. I mean, I guess you have some support here, 108.20, but really it's 108. I'll tell you this, guys. If the euro breaks through 108, I'm going to short the euro dollar. I am going to do it. I'm going to short the euro, and I'm going to look for 107.10 to 106. So if we break through 108 today, let's just, so I can clarify with you guys what I'm looking for here. If we break through 108, I'm targeting 1710 or 106. Okay, that's it. I still think we're in a wedge, or excuse me, I still think we're in a consolidation. So I don't want to be super bearish, looking for a move down to 100 or parity or anything like that at this moment. But I do believe a break below this trend line is going to bring some dollar bullishness, and that's going to be as a result of, let's say I'm right about the FOMC is not, the minutes are not as dovish as expected. If that's the case, then I think a lot of people have been leaning on the dollar overnight. I think a lot of people are trying to short the dollar up here. I think a lot of traders are thinking the dollar's toast. I saw a prominent hedge fund guy on Twitter yesterday thinks the dollar Canadian is going to hell in a handbasket. He thinks that the dollar Canadian's going to 120. Very prominent hedge fund manager, talks a lot on Twitter, um, and he thinks that the dollar Canadian's going to break down severely. Uh, and and so you know if you get a not so dovish FOMC, I think you're going to see a lot of those positions unwound today, and I want to take advantage of that. I want to be here to take advantage of that. Um, let's go over to the cable. So, like I said, I would have shorted the cable this morning if it wasn't FOMC minutes coming out a little bit later. That type of move on this 127% extension move on a merger deal. Yeah, I wasn't buying it. I mean, I don't mind being short the euro pound. I have other reasons to be long the cable, but I wouldn't do it against the dollar. Anyway, so here's the pound racing right up to 149.50. That's going to be 149.50. Excuse me. 149.50 and 150. Key resistance. Sorry, I got to put in range biases and all these. And support for the cable. Now, I mean, that's an hourly chart. I mean, support really is right here, but we can be below that later today without much of an issue. What is this? Let me remove that. I mean, you can see how critical this support's going to be on the way back down, but I think we'll find support well ahead of this 148. We'll just keep an eye on that yellow line. We'll just keep an eye on that yellow line, depending if the dollar gets bullish. Okay, if the dollar for some reason just rips everybody's socks off, and for some reason the Fed just doesn't seem dovish at all. The minutes seem not dovish at all, almost borderline hawkish. That's a level we'll have to look at in the days ahead. I think we'll find good support at 148.50. Just decent support on the way back down. So I expect levels down here to be pretty well supported. Let's go over to the Swissy. Now Swissy, I really want to buy it. I know Greece has got basically another month to survive, and so I really want to be along the Swissy. I haven't done it yet. Um, it's very messy too. Okay, let's go out to a daily chart here. So let's go to a 4-hour chart. So here's a 4-hour chart. Okay. So obviously 95 cents is really critical support. Um, this is not a great representation of the dollar, just because the dollar index is already showing resistance. The whole reason why the dollar Swiss is a little firmer right now is just because Greece didn't fall off, into the Aegean Sea this last week. So, or it looks like it's not going to happen this week. Excuse me. So that's helping the Swiss be a little weaker. Um, it's really a you know difficult play. That trend line that comes through, this little breakout point through here, it's probably going to offer us some pretty good support at 95.85. Resistance is just going to be the spike high. I mean, yeah, that's plain and simple. 96.70. Okay. Let's go into the yen. So the yen, here's our triangle, right? Um, does and I'm still short the dollar yen. Does anybody know why I'm still short the dollar yen? Okay, let me rephrase that. What happened yesterday that kept me short the dollar yen? I told you guys yesterday. I told you yesterday in the lunch money webinar. I said, listen, I'm short the dollar yen. I'm not really too happy about it. There's something that's going to have to happen in order for me to stay in the dollar yen. That's right. The sell off at the U.S. equity markets at the close kept me in the dollar yen. That was it. It was really quite simple. So if you saw the E-mini futures yesterday in the afternoon, this was the last hour of trading in the U.S. equity markets right there. And when that happened, I wiped the sweat off my brow, and I said, okay, great. The stock market sold off at the end of the day. I'm going to hang on to my dollar yen. I still haven't been happy about it, but it kept me in my trade. And I remember I've been in this trade for a long time. I mean, literally since when I say a long time, I mean really. And I added a little bit yesterday, but I've been in this trade since right here. March 12th. I mean, we're going on a month. Going on a month, and I'm only up 51 pips right now, my cost average. It is my biggest position at this time, and obviously I had a lot more profits down here, and I'm stupid not to have taken it. But hindsight's always 2020, so I can't beat myself up because of that. But what I will tell you is, and remember, the dollar yen is not a good representation of the dollar index. So I want to make sure I clarify that. Here is the triangle. This is a breakout. This right now, as it stands, is a false breakout. Consider that. Because if this is a false breakout, there is now a strong possibility that we bust all the way through these support levels, especially if the U.S. equity markets roll over. Okay, so that's not important at this moment. It's not important until we get back below. If for some reason we drop below 119 in the coming days, that's going to be extremely bearish, the dollar yen. All right. But we're not there, nowhere near at the moment. So right now, key resistance is 120.35, basically. That's just critical. It's really key resistance now. That's why I put a double asterisk there, because it's so important. Support. Let's get rid of this. Let's do this. All those lines are actually really important today. It's a 38% retracement. 50% retracement of the last move. 119.65. So this, let me just show you right here. Since we're so close, and this is the 618, and you see these spike lows. This is a right here is like a little it's a zone called a buy zone, if you will. Here, if I can highlight it for you, right through here. This is a buy zone for the dollar yen right now. For you guys that are bulls, you know, this area is going to provide buyers. We get below 1950, and that's going to open up that big reversal. You know, we got this triangle, false breakout, reversal. Okay, that reversal gets opened up below 119.50. Okay, so I'm going to put that down as support right now. It's also a 618 retracement, which is very important to me. So we are obviously still in a range environment. Crap. Canadian, by the way, lots of people were getting very bearish. The Canadian down at 124 today. I'm going to just gotta say that out loud. Um, I'll be back in a moment. When I come back, we'll do the Canadian, Kiwi, Aussie, dollar. There's no. We have what do we have today? Aside from the minutes, we have crude oil inventories. We got Dudley speaking a little bit later this morning. We really have no economic data. We're all just waiting on the meeting minutes at 2 o'clock this afternoon. Eastern time, so we've got a lot of time to fiddle faddle around. I'm not in any particular hurry. So when I come back, we'll do the analysis on all the other majors, then I'll take your questions. So don't go anywhere. Thanks everybody for being here. Be right back. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. Hope everybody's having a great trading session. Hold on really quick. All right, sorry. I'm back. All right, so let's go into the dollar Canadian. All right, so the dollar Canadian, I am long, and at the moment I am wrong. So you know what's I just tweeted out something about, because it was so frustrating. You got, I was just thinking about this dude on CNBC, right? This dude on CNBC, and some of you guys can take guesses, and if you guess correctly, I will say yes or no, but I will not repeat the person live because that's not the kind of person I am. So there's this guy on TV. He's a CNBC contributor. He's he's uh, thinks he's hot stuff. He's got a signal service, and uh, um, um, let's see. No, no. This guy he has a signal service, whatever. He just launched it actually, and he's like, I'm getting long gold, right here. And I mean, literally, he top ticked the market, and now we don't see him, and he has no, um, no accountability or anything. He just disappears, and we'll catch him on CNBC in a couple of days, and he won't even talk about it. I can guarantee you, no one will hold his feet to the fire. So then you have you have a situation like this. I have to come on here and I blog about, hey, I'm long the dollar Canadian. I own it at 124.80. Well, actually, I added to it 124.63. Okay, is my cost average. So I'm out of the money like 40 pips. But now I'm going to talk about it and tell you why I'm still long. Okay. I'm gonna talk to you again and say, oh, well, here's the reason why I'm long, um, and kind of guide you through it. And when I'm wrong, I have to go, hey, man, I took a loss. Or when I'm right, it's like, okay, this is how I'm managing my trade. It's much different, so you have to be really careful with people on, CNBC, if you will, because they'll say things and then they just disappear. Doesn't matter. Doesn't matter to them, right? Doesn't matter what happens there. So here is the U.S. dollar Canadian. Well, it doesn't matter what happens to you because, frankly, it you know doesn't matter. Anyway, it just irritates me to no end, especially in a situation like that where I was just on. How did I just had this from yesterday? Okay, here we go. Uh, USD Canadian and oh, what did I just put? I'm sorry. I just put the wrong thing. That's why I was like that wasn't the right one. Here, let's go CL. I was wondering why the hell that wasn't working. That's because I put in E-mini futures and not crude. So now let's go over to crude. Okay. So, okay. So here we go. So here's the dollar Canadian and here's crude. I blogged about it yesterday. And what I'm looking for is I'm looking for crude to sell off and, and the dollar Canadian to reverse. The dollar Canadian actually came down and, with general dollar weakness overnight, the dollar Canadian came down, took out some stops and is bouncing back a little bit. But really the support comes in at 123.50. I'm giving it a little bit of wiggle, obviously, knowing that. But the dollar Canadian is near support here. And if it breaks through 123.50, it's bearish. I mean, there's just it will break down and crude will break out. Okay. There's no if and or buts about it. But what I am trying to do is trying to play the range, as you can see here. So now here's the 4-hour chart, and this is what we're dealing with. So we've got 124 support. We spiked down to places that we've been a lot of times. You can see we've been down here quite a bit. I mean, look at how much support is down here. Just think about all of January or all of 2015. We've been really in the 123 sub 124 level. 1, 2, 3, 4, 5, 6, 7, 8, 9. Basically, we've been down here 9 or 10 times all of 2015, and we've bounced right back. Okay, Kelly, you're right. Kelly, you actually got that one right. Not saying that you don't get things right. I'm just saying you guessed correctly on that. Good job. Yeah, you guessed the right person. Didn't think you were gonna be. Yeah, oh, it's good. Anyway, I didn't think anybody would guess that. That shows you how unpopular he is. He really is just a douchebag. The guy is like seriously class act, and it's amazing. So anyway, we fell towards support, and to get bearish down here is real risky without crude oil breaking out. Okay, crude oil really, needs to bust out to the upside in order for the dollar Canadian to break down. But we have a lot of support down here. 123. What's the spike low right through here? 123.50. That's major support today. 123.50. Major support. And listen, if we break through 123.50, I will have to stop and reverse. I'll have to go short the dollar Canadian, especially if we close below there. Okay, because then we will have to target 120. Now, resistance for the dollar Canadian is up here at 125.15, I guess. Let's do this. It's actually going to be a little lower than that, but where are we at? Can we have divergent relative strength too? Interesting. Okay. Yeah, key resistance here is 125.20. I mean, that's it. Okay. 125.20. Let's go over to the Kiwi. So the Kiwi bounced right into resistance. This is a trend line resistance. think Tom in our chat room. I didn't get a chance to talk to Tom this morning, but I think he dropped in a chart. He's probably pointing out this trend line resistance. It's pretty key. Resistance in the Kiwi now is at. I just had that drawn. I don't know why I deleted it at this 76.31, and you can see that's a 786 retracement. So 76.30. And support. Definitely not a perfect triangle. Actually, you know what? Support's going to be down here. 75.50. Two places, 75.50. And by the time we get down here, it probably. Oh shoot! I didn't want to do that. Did that on accident. Right here, then right here. Because if we stay in the apex of this, not very this triangle is not very symmetrical. But if we do, we got support here, and by the time we get down here, we'll come into the trend line. So that's going to be 74.80. Oops. Was that 74.80 and 75.50? Okay. 74.80. 75.50. Okay. Let's go over to the Aussie dollar. So check it out. I got out of the how you want to see how good of a trader I am? This is how good I am. So yesterday we had this Gartley pattern. You see that? Weren't we on the morning edge when I bought that? Were we right there on the morning edge yesterday when I bought that? I want to say it was the morning edge. Oh, but what was it? Yeah, it was the morning edge. I bought. uh, yeah, I made 4 pips. Kelly goes, yeah, you made 4 pips. I made 4 pips from that. I got out like lunch money webinar, like right here. I got out like, yeah, like lunch money. I got out like right here. I'm like, forget it. I don't want to be long the. I don't want to be along the Aussie anymore. I'm like, this thing's just lack of follow through. The stock market was looking a little heavy. I thought it was the right decision. And then last night, just look at that thing. It ripped. Yes, that's what lack of patience will do. See, I've been wanting to day trade more. The reason I've been wanting to day trade more is because I just didn't. I haven't been wanting to stay in my positions as long because of the I know we're winding up in the dollar index, and so I'm just like, I just don't want to stick around too long in a lot of these trades. And of course, I get long the Aussie and I get out of it literally like right here, like somewhere around here. Like I said, I made 4 pips. Hmm, what a dummy. Anyway, so here's the thing. Channel resistance, 127% extension. Okay. Also a 50% retracement. So see this confluence? Go with the 4 hours. Better. 4-hour chart. 50% retracement, 120 or channel resistance, and 127% retracement or extension. 77.35 key resistance today. Support. Let me get rid of the Gartley. That just makes me angry looking at it. It does. I look at the Gartley and go, oh my God, I can't believe I got out of that thing so early. I just don't even want to look at it. That was a good call, though. I have to admit. Um, all right. So, where's support here for the Aussie? Hmm. I'm not really too sure where it is. I'm thinking right there, which is going to be 76.90. But it's not great support. All right, dollar index is real simple. 98. You know what? Hold on. We got 97 and a quarter, and also, I mean, I mean, we're gonna have a really, really dovish Fed. I mean, when I say this, the FOMC minutes are gonna have to suggest that we're going, um, that it's going to have to suggest that the Fed is not raising rates until 2016 for us to get all the way down here, in my opinion. But this will be 96.80. Okay, so 97.25 really is support. 97.25, 96.80, and then resistance is 98, and that's mega resistance. Okay, it's like really, really key resistance. Okay. All right. And we're still in a range here too. And we're in a range here. All right. So there you go. There's your bias chart. But hold on. Before we do that, let's take a look at a couple.